What a week it was for the markets. The bulls finished with a high. The Nifty closed in the green for the sixth straight day, gaining 4% this week. And the big headline outside equities was the rupee hitting that psychological 80 mark. Hello and welcome to the Editors Roundtable, where we put the spotlight on all the key factors moving the markets. And of course, I have all the editors here with me. So guys, what is it? Like the team red versus team green or something like that?
I was just discussing with Nigel, perhaps, we should have changed sides a bit to sort of, match it more properly.
I think Arsenal and Man U for once on the same side.
They're both on the wrong side. They're both on the wrong side of the table for last many years. Obviously.
First and last time, maybe.
Hope this time things change. But you know what? What a difference a week makes, guys. Last week, Sonia, you were not there. I was just telling everyone that I felt that I aged a bit. This week, I thought that okay, I was feeling young again. And the way the market was rallying, and that's the magic of the bull market. When things go well, you tend to feel good about it.
Absolutely. What a run. And, the sense that you got was maybe this was the real deal. The kind of flows that we were seeing, the kind of finishes you were seeing on a day-to-day basis as well. Towards the end of the market, second half, when we were going into closing bell, we were thinking, now we're going to see the big dip. It never really came.
Yeah, it didn't come. And finally, FIs are back, right? I mean, I don't know if they're back for good. No one can tell that. But, Anuj, that brings us to the point about the overall market setup, right? So much can change in a week. Now it's what, up 9% from the lows that we saw in June, and it's quite a bit of ground covered.
Absolutely, and the FOMO factor is back, Sonia. Talk to a lot of people. A lot of people are waiting to invest at 15,000. That greed to invest at 15,000 is turning into panic to buy at 16,500. And I tell you what, this market looks like in a hurry to go to even 17,000. 2 days of back-to-back FI buying 2,000 crores is what you had. Big numbers. And one reason, as Nigel said, perhaps it looks like the real deal. The mid-cap index, it's covered 60% of the ground in 1 month flat. The Nifty itself has recovered half of the lost ground. I think the bank Nifty is already at the 200-day moving average. And the market's got some defined leadership. The auto index, for example, this week as well, it was up. This month it was up 8%. It's at new high. The FMCG index is at new high. 6 index stocks new high this month. 5 of them were auto stocks, so something that you track closely, right? So double cheer for you. And of course, one was the FMCG name. And of course, ITC had the last laugh. You remember you had tweeted once about ITC, I'm here for the memes, right? Who has the last laugh now, right? It's ITC. So move over, the meme factory has to find another stock now. And just one last word. On Monday, I think we have a bit of an irritant because we'll react to 30% of index earnings.
Yes.
I think once that is out of the way, then of course the Fed outcome on 27th. But I think the market is telling you that it has some unfinished business now at the 200-day moving average, somewhere around 17,000 or so. In fact, that will be my key theme to track next week. Stocks getting into the around that 200-day moving average. But what about earnings? This week there were lots of hits and misses.
There were more hits than misses. I think that's another reason why the market sort of built on to its gains, right? And I want to get Nimesh's view on this because he also tracks a lot of these stocks. But first, I just want to put the hits and the misses on board. Initially, it was HUL's numbers. The numbers, of course, no problems there. The volume growth was about 6%, so looking pretty good over there. Brokerages raised their target prices on HUL as well. Citi raised it. Macquarie raised their target price. IndusInd Bank reported a very good set of numbers. Loan growth at 15 to 18%. But the real standout for me this time was mid-cap tech because there was such a big drawdown in these stocks in the last 6-8 months. The numbers were not bad at all. So whether it was Happiest Minds, where the company reported a very strong quarter, Persistent Systems, it was the highest ever TCV bookings that they reported. And mid-caps on the whole did really well, right? Nimesh, I mean, come in on this because you had names like, say, a BEL, an SRF, a Polycab, a Kajaria Ceramics, and these were the darlings of the market, say, about a year and a half back. They all crashed, so valuations also have become attractive, but the numbers this time around were pretty good.
Oh, yes, Sonia. In fact, this is what the feedback was well, right? In this earnings season, watch out for stocks where there is even a small bit of earnings surprise, and you will see the reactions on stocks. Federal Bank, IndusInd Bank, you spoke about Persistence. There are so many stocks which have rallied 15-20% just on a bit of small beat on earnings. It's not like none of the earnings were like a big beat, just a small beat on expectations. For example, but today look at Ultratech. I mean, the numbers were not bad. It was not that good, but the stock was up 6%, and it actually rallied. It took the entire cement pack with it, in terms of short covering or whatever you call it. But the entire cement was buzzing in trade today. So that's clearly playing out, and that was the expectation as well. But the big talking point from a dealing point of view, I guess, the return of FI money. We all been talking about on a daily basis this week. So this is the first week after April 22 that we are going to see a net FI bi-weekly figure. That's something which has been a talking point in dealing rooms as well. I spoke to some large insti dealing heads who actually manage a lot of money for the clients, and there are a couple of feedbacks why India turned into a favor this week. One, of course, the falling crude prices. At the margin, that's macro positive, so that's helping the FI sentiment. Second, and the important thing is the way things are happening in China. We've been talking about so many things which are not going in their favor. There is a talk of real estate bubble as well. Maybe Prashant can talk more about that, and that's actually helping at a margin to get the money back into the Indian markets. Though India is expensive, but people are finding it safer bet at this point in time. So that's the key reason why the FI money is back. So that's something. And again, the whole point is whether it's a 1 week phenomenon or it's a reversal of trend, nobody can guess. But at the margin, if crude is lower, if earnings are good, I think the FI money will chase Indian markets for sure. That's the broad feedback.
Just a quick point, and maybe this is we can chat around this. We all, for example, a lot of people were saying that over the last 2 years or so that, and it is true that retail has really supported the market in a big way.
Yeah.
But when you think about it, we really want FIIs to be buyers in the market as well, right? I mean, that's when, they are forced buyers. They buy as prices go up. I mean, the
momentum chasers.
The momentum chasers. Yes. So that makes a big difference in terms of price performance. So I just want to make a point that, I think FIs as a category are much berated, not loved, actually berated, right? Because they're saying that, well, they're selling, let them go find some other market, this, that, the other. But you want foreign...
You want FIs to be there.
It's called tough love, right?
I last week presented the statistics about how this time around retail has not been bothered about the decline in the market and has stayed put. Yeah. In fact, in the decline, the retail shareholding has gone up to all-time high, yes. Which I think for me is really heartening, provided this time it's truly different and we go on and make new all-time highs and much bigger highs.
Anuj, one more point. I wonder how much of the retail activity, you mentioned FOMO, that word struck with me, because how much of the FOMO is led by people anticipating that, almost trying to outguess FIIs, that FIIs will buy, so let me actually be a buyer. Right. I think some of that element is happening as well, right?
Yeah.
I'm talking about HNI is high.
If you look at this week, the cash volumes have picked up again in the last 8-10 days, and that shows that the retail HNI investors are back in the market. I've been saying for the last 2 weeks that the real move will come in the mid cap and small cap, and that's the indices which has relatively outperformed. Yeah. Individual stocks have gone up 15, 20, 30, 40% from the lows. So clearly the momentum is back. The looks like the retail participation is back, and even the HNIs have started participating. But the fact is, there has been a lot of miss out feeling as well. At around 15,300, 15,400, not many were betting on that there will be a sharp rally. So there is a bit of miss out.
Nigel has something interesting.
Nimesh, let's take that point forward. We briefly spoke about Ultratech Cement. That surprised everyone with a good set of numbers. So let's run you through how the cement space is shaping up. Really, there are plenty of headwinds actually, and in the near term, things could look a little bit sticky for the cement companies. That's because of a few headwinds. So the first half of the year is likely to be a bit of a washout. A few factors have played out. One is that input costs have spiked up, whether it's petcoke, whether it's diesel or coal prices. The second factor in there is that there's a bit of an uncertainty. Remember, the steel companies, they got wrapped on the knuckles. The export duty was levied, prices were put under pressure. So the problem was, will there be a contagion effect, and will there be some kind of a cap put on cement prices? The third factor is that CCI, well, they've really been powerless actually in the last many years. They've been talking about putting penalties, etc. But in terms of financial impact, it's not been a really big impact. The problem is now they have been, taken away the pricing power from some of these cement companies. So that was the third factor at play. And suddenly we have been talking about demand all along. Now we are fearing supply, because there's a new player in the industry. Adani's come in there and lapped up the Holcim Group's assets. That's both ACC as well as Ambuja. And remember, Holcim Group was a very, very dull or lazy player in the last few years. They lost market share. They gave plenty of opportunity to the others as well. Now you have an aggressive player coming in there. And Ultratech Cement is saying, hey, we're not going to give it away so easily. We want to be the boss of this space. They quickly announced a capacity expansion of more than 22 million tons odd. So in a matter of a few years, they'll be moving from around 120 million tons all the way to around 160 million tons or thereabouts. So in the near term, it could be a bit of a headwind on the multiples, on the valuations. On the longer term, consolidation will drive the business and the bigger players will get larger as well, which brings us to the point that some of these smaller companies which are trading at attractive EV per ton, will they get picked up? This is just some of those valuations out there. There could be possible consolidation. The problem is, when does it happen? At a forced price, or does it happen at an attractive price? So that's something that you should be tracking as well. The street, though, is bracing for a good recovery in the second half of the year. Why is that? Because pet coke prices, they have shown, given some bit of a sense of cooling down. They're down close to around 10% from the recent peak. So that's point number one. The second factor is demand normally picks up post-monsoon, which is another factor that played. Demand as well as pricing should come back. And the third factor, some of these cement companies, they are trading at attractive valuations. On an EV upon EBITDA, they're trading at around 10, 11 times odd. Remember, otherwise, if you compare it with the 10-year average, it's around 12 to around 13 times odd. So valuation-wise, some of these large names are trading at a bit of an attractive valuation on EV upon EBITDA and an EV per ton. The big question, though, is this a re-entry opportunity into the space? Point number one. Or in fact, is the valuation multiple seeing a bit of a derating? That's the other point in there. Time will tell which way this one swings.
Absolutely, Nigel. We have our work cut out for us, right? I mean, next week is going to be pretty hectic, guys, in terms of all that you need to watch out for. There's the FOMC meeting on the 27th of July. And of course, the street is expecting the Fed to raise rates by about 75 basis points this time around. There's the RBI policy from the 3rd August to the 5th of August. And then we have a slew of earnings largely coming through from the auto space. So you have the likes of Bajaj Auto, there's Tata Motors, Maruti, Ashok Leyland, all next week. And then you have Axis Bank, Tata Steel, Tech Mahindra, Asian Paints. The list is pretty long. It's flashing for you on your screen. So we're going to talk about that. We're going to head into a short commercial break on Editor's Roundtable, but don't go anywhere. When we come back, we'll also have a guest